I'm coming to you today with a new video. A couple of housekeeping items. Firstly, I'm going to cover today a lot of the questions that you posed in the comment section of the community tab. Thank you for doing that. This might be a new format going forward, at least maybe on a monthly basis. Let's just see how it goes, but I'm happy to go through these questions, give you at least my view and my opinion. Of course, like anything in life, take one person's view and opinion with a little bit of a grain of salt. Do your own research. That's not necessarily a disclaimer. It's just a life lesson that I think has worked well for myself. Everyone's prone to making mistakes, and I'm certainly no exception. Second of all, one other point I want to make that's very, very important. And that is time frames. When people talk about investing or trading, it is important first to think about the time frame that the presenter is discussing their viewpoint. A lot of people look at a chart, a daily chart, a 4-hour chart, whatever short-term chart it could be, and have a long-term bias and kind of try and extrapolate what the person's talking about on the short term to their long-term view. And that's a dangerous thing to do. So essentially, always look at and think about the time frame the presenter is showing you, and then choose to either ignore it or not, depending on how that relates and equates to your position and your own trading or investing outlook. Right. So if you're a long-term hodler of Bitcoin and crypto, and you have a long-term view, and you're not too concerned about short-term volatility, then don't look at price every day. Don't look at some of the short-term analysis, and even, for example, the 60-day analysis I'm going to cover in a minute. Don't go into that and then let, for example, maybe a short-term bearish view pull you off your long-term narrative or your long-term bias outlook. If you're bullish long-term and you believe in crypto, don't let a chart that shows it may go down to 3,000, so it may go down 10% in the next few weeks. Don't let that throw you off. That's just noise, and it's prone to taking you out of position and then putting you in a position where you've just lost the ability to get back in with any decent amount of size. So just be aware of that. You have to understand whether you're trading, whether you're actively trading, or whether you're sort of one of these position traders over maybe a monthly basis, or if you're a long-term hodler. That's also very important. What I have on the screen here is a snapshot of the questions that were asked. I took out ones that I thought were the most relevant, so there's around 15 or so. I'm not sure how long this would take. I'll try and give each question the time they deserve and what it needs. So firstly, the first question that I have here on the list is, whatever you do, of course, please mention the 60-day cycle. And yes, I know that's pretty much on top of everybody's list at this point. So let's get into a few minutes, maybe 3 or 4 minutes, on the current Bitcoin cycle. I'm going to go here to a 60-day cycle starting from December to the current action. So we have one of these situations where, to be perfectly honest with you, even I don't have a strong opinion on whether we're going up or down. And some people say, well, what's wrong with you? What use are you if you can't tell me if it's going to be up or down? And if you're telling me it's up or down, how can you be wrong? Well, I can't be wrong, but I can only be wrong if I take a position and I lose in that position. And right now I don't have a trading position. I have a long-term buy and hold position. Of course, I've said that many times, but from a trading position, I don't have one right now. I'm waiting for some confirmation. So I'm aware of both scenarios, and they are as follows. We are either on day 62 of a cycle, or we're on day 9 of a cycle. And why is that? It's because we had the December 15th low to a December 24th high, day 9, and we spent then 42 days grinding lower to this point here on February 6th. That was in the window for the next cycle low. I've talked about February 15th, which is today, being right in the middle of that timing band. So day 62 is today, February 15th. we are not near a low at this point. The last low we had was back here on February 6th. So at the moment, that could potentially be a day 53 cycle low. I can't tell you definitively. Some of this work and analysis is rear vision mirror looking. It's looking back, and that's just the nature of cycles. We have to work with all the limitations of every strategy, and this is one of the limitations. Cycles are just a look back in time and how an asset performed. Right now, this here is 50-50 a chance of it being a cycle low. And the reason for that is we had this huge surge on February the 8th that has now since really not done much. It's kind of consolidated those gains without really making any headway higher, without any real threat of breaking higher and continuing. But at the same time, it's also held the lows each day, so it's managed to sort of hold on. And initially I thought this might be a bull flag that's forming here, but I don't really think it is either. But right now it can break either way. We are still early enough, or still in a reasonable timing band for this red scenario to occur, where we're going to lose the 10-day moving average support, we're going to break down, and then finally come down to form a cycle low later in the timing band. So if you consider maybe another 5 to 10 days from this point forward, that puts us to day 67 to 72 into the timing band for a cycle low. Nothing outrageous, well within a normal or reasonable timing band for a cycle low, and then we can rally up from that point. If that were to happen, because it's already on day 62, the longer this moves sideways and then drops, the most likely the shorter the decline will be. So because we are now kind of advanced in the cycle count, I do not necessarily expect or would think we would see sort of a massive capitulation, which gives us the idea that this December 15th low may indeed end up becoming the 4-year cycle low I talked about in previous videos. We could be looking at, with this red scenario, a double test, a double bottom, I should say, of the December 15th cycle low. And that would be extremely bullish, because we had only 9 days of rising action in the cycle, and we had all of this sort of consolidation, all this accumulation here, without the market being able to move lower. And then finally a cycle low in this area being a double bottom would set the scene for kind of like your bear market 4-year cycle bottom at this point. It means also that the next cycle will probably, or should, break above this level, and should also break above the December 24th level and rally maybe up to the high $4,000 range, maybe even above $5,000 range. But I would also think, with an April cycle low due another 60 days after that, I think the more likely scenario is that we get a little bit more of a fake, get everybody excited, and then kind of retrace back a little bit. And this is just bear market mechanics still, even though it may be a new 4-year cycle. It's just the market really playing on the bulls and testing their patience more than anything else. That's the one scenario that I'm looking for. This is the one I'm hoping for, to be honest with you. I really want this to come down, because it provides a very clear cycle low and a clear entry on a reversal higher to at least take advantage of a good part of the early move of the cycle. If we get this green scenario here, I'm going to zoom in just a little more. If we get a breakout from here and we exceed this January 19th high, which on this exchange here is at 37.75, that's a signal for me to go long. In this case, I think it's too extended in the cycle, it's too far along for this to be a continuation of this cycle here in the day 60 count, and then I think we're looking at a day 53 low, and we're looking at a continuation and a higher move as this green trend line suggests. So I'm looking for this confirmation. I'm not going to be shorting this market anymore because it is too long and too far out. The only time I would probably short would be a break of this day 53 low. So once, or if it gets below $3,300 area, I would probably short at that point, only because there is the possibility that we get a huge capitulation towards the end of February into that cycle low at that point. So that's something that offers me at least some risk reward to take that bet. But until then, there's no point, even if it starts breaking down from here, there's no point until this day 53 cycle low is taken out for me to get anywhere long on this. To get anywhere short. On the long side, I'm looking for a break of January 19th to go higher on that point. So that's the analysis on the 60-day cycle. I hope that's helpful. According to some experts, Tone Vays, Tyler Jenks, bear market till 2023, price below 1,000. What are your thoughts on this? Well, of course, I'm actually friends with Tone. I know him personally. I don't know Tyler. I don't know any of his hyperwave work. It is mentioned quite a bit online. One thing I will say is I will never pass judgment or criticize anybody else's work if I have not at least analyzed and got a feeling for what it is. And in this case, I have no idea what that work is and what that body of, what that analysis looks like. So I cannot pass judgment. And if anything, I know Tyler has decades of experience. So I got to assume he's, he knows what he's talking about as well. There is room in every asset, every market, every trading for opposing, alternative, many different views. And this is just one of those cases. I just cannot and will not and don't care to go into other analysis. I stick with what I've learned, what I've studied, what's worked for me. And, if my analysis is incorrect, that's fine. That happens often enough. I think I mentioned it in the last video. Most of my trades are incorrect or wrong 40% of the time. So if I'm wrong, that's where my risk management comes into play. That's where I make sure that I'm escaping every one of those 40% of cases with as least amount of damage to capital as possible. If anything, I want to come out break even. I want to come out with a small loss. But my risk is always defined. My risk is always managed. And that allows me to be a little more confident in my views and be quick to admit when I'm not right on my analysis and to pivot if I have to, get out or even change direction and go with the new direction. That's something that is very important for everybody to understand. Okay, so I hope that answers that question. So this is again, Ken's got 3 questions here. In the previous video, you indicate a low for Bitcoin would be February 15th. After that, price would go up slowly. Has that changed? Well, no, it hasn't really changed, but let's go back to that image. I think I covered that here pretty well. Like anything, like cycles and anything else, it's just a matter of letting price evolve, excuse me, and seeing where the market wants to go. And I only have an outlook, but again, it's not a definitive, it's not an absolute view and statement. It's just a matter of evolving with the cycles one after the other to see what the market wants to do. At this point, it's come close now. We're near that cycle low point. Volatility has been pretty light in general. We're still pretty tight in the Bollinger Band. So I think a move is coming, and I think it's just going to show itself and reveal itself fairly soon. February 15th is today. I would love to see a 2 or 3, 4 day breakdown into this area, or maybe even, like I said, double bottom and then reversal, and that would be a perfect cycle low, and that would be exactly what I would expect. And then to the second part of your question, yeah, I think we do get another sideways move. I don't think we're going to see, besides these huge counter trend moves that probably or could occur early in the cycle, I think over the 60-day period for the next couple of cycles, maybe into the summer, maybe even to the fall or the autumn for my European friends or my worldly friends, we could be chopping mostly sideways with some slight upside appreciation. That's something we should all be prepared for. So yeah, I think that answers that question. And then, okay, I duplicated the question there, so that's long versus short ratios, how it affects price. Ratios themselves, I think, don't affect price really in any way. Maybe your question is, how do long positions and short positions affect price? Well, I mean, long and short levels simply represent sentiment in the market. So when we see a long, significantly long position or significantly short position build up, that's simply the market or the collective ecosystem of an asset tell us that they're all pivoting or moving with one view in mind, and we see that in cycles, or represented in cycles. Early in a cycle, you have a capitulation. Shorts are in a huge position, and they get covered, meaning that price begins to rise, and the short position goes against them. They have to start buying back those positions, and that forces price higher. That starts to unwind a short ratio or high short ratio position, and that provides kind of the energy for a cycle to start rallying higher. Then what you end up happening, people start to perceive that as being a turn, something bullish. The market's going to go higher again. You start to see sentiment on Twitter and social media and also in media in general begin to talk more bullish. You start to get an accumulation of long positions that begins to drive the market higher, and then you get this ebb and flow fashion occur. So if the 4-year cycle is positioned higher, then that buying will continue for a long period of time into the 60-day cycle. If the market is in a bear market, then you're going to get kind of an early topping process. You're going to get some selling, and then of course the leveraged long position begins to unwind. Right? They start to hurt. They're on margin. They're starting to lose. They over leverage, and then you get this pendulum effect occurring in the market, where then selling means more selling, and then you get to a point where people start to think, well, this is actually going down, so let's short this market. So then you get this whole cycle effect over the 60-day period or 4-year period, whatever the cycle length is, occurring. So that's essentially that's how I view short and long ratios, or long and short impact on price. It's definitely sentiment plays a major role in that. Next question is Alex. What's probably BTC goes to 1K or below? I think very, very low. I don't see how this asset really gets below 1K, to be perfectly honest with you. Doesn't mean it can't happen, but again, I just don't see it. What's the probability 2017 was the last bull run? We won't see it one for another 10 years. Again, low. I think we are early in the evolution of Bitcoin and crypto to see sort of these long 4 to 6 year bear markets. I think that may come in the next 4-year cycle after this one. But I don't think we hit the first real retail mania phase for this asset class. It got a little close, but I don't think there was massive broad participation like we saw, for example, in the 90s with the dot-com era, or with the gold phase at the end of 2011 or around 2011. We just never got anywhere near close enough, I don't believe. And also from a market cap standpoint, it was below 1 trillion total. I don't think for a worldwide asset that's anywhere near sort of a blow-off top. We had, if I'm not mistaken, somewhere around $3.7 trillion in dot-com stock valuations at the peak of the 2000 bubble, and that's pretty much a US phenomenon. It wasn't a worldwide deal. We're talking about a worldwide asset class right here, where everybody has the ability to get onboarded and to get into this phase. Unlike stocks where you need a brokerage account, with crypto, it's pretty easy to get on board. You can buy it on the street with local Bitcoins. There's plenty of ways to get involved. Point being that I just don't think from a market cap standpoint we saw anywhere near the levels that would tell me that 2017 was the final, or at least a bull that you won't see repeated for a very long time. So how would JPM token affect BTC in a long and short run? I think that's actually positive news. I think that's just confirmation that people in the traditional banking world see the need to have some type of coverage or some type of product in this space. Now, obviously, it's not a competitor to the public chains or the decentralized chains that we see today, but they are inspired. JP Morgan token is inspired by the efforts and what's going on in the market on the public side. It is a perceived threat. There's no other way to look at that. And it's a subconscious thing on their behalf, but they see the potential threat down the road to some of their business in some form or fashion, And this is just validation, in my opinion, for BTC and also blockchain type technologies in general, and the public technologies. So this is good. I think it's really good. I don't see how it impacts any of the public technology. I can see it. I can see it impacting Ripple's use case or Ripple's bias for sure. But again, I'm not sure if that is going to matter too much on Ripple in the short term as well. Miguel asks, accumulation phase or distribution phase on Bitcoin? I think we are past distribution right now. We had that very long. Let's flip back. So here was a huge distribution phase right here. This gave way to more capitulation, final selling here. We've got a combination of distribution still probably going on, but I think now we've got a lot more accumulation that started, especially because we have this cycle picture here, which was day 9 high, 42 days lower without exceeding this low. So that we had 9 days of rising, 42 days of declining, and we still did not see a new price low. That is accumulation-like behavior. We probably will see more accumulation over a couple of cycles before we have enough accumulation, enough strong hands now built into this phase and into this foundation for the price to then begin to accelerate. How futures affect BTC market? Well, this is a multi-layered type question. So futures are more of a forward contract. It's an agreement between parties to buy and sell at a future date at a future price. But futures are essentially a paper bet, right? You don't have to have skin in the game to enter into a futures agreement, futures contract. Obviously, you need to stand for delivery in the future date, but you can easily buy that or sell that or pass it on. So I think what the futures market has allowed is for people to come into this space and really push down price or sell Bitcoin down the future and really move it, where it didn't have that mechanism in the past. Really, there was very limited ways to sell Bitcoin. Obviously, you could sell in the spot market and whatever coin you owned, but not in a leverage type fashion. I think that accelerated. It didn't necessarily accelerate the bear market, but it certainly helped push it lower. It was going to top no matter what. I think in the long run, though, I think what it does is it provides more volatility, potentially short-term volatility, but it's going to stabilize price as well. It's going to allow more discovery of price. It's going to allow more participants into the marketplace, and I think overall it's going to help mature Bitcoin as well, and over time it's actually going to decrease volatility because of that. But yeah, I think its actual effects are a little overstated in general. I think there's a lot of sort of fear about it, but I think it's only going to help expand Bitcoin into more traditional markets over time, and it's really one of the first steps to, say, ETFs and other types of investment products and assets in this space. And then next we have Michael. Still haven't seen the volume capitulation that would signify a clear trend reversal. What are the odds it just isn't one? Okay, so yeah, that's a good question. We didn't see with this decline here huge volumes, although we did see decent sized volumes. I do love to see massive capitulation, massive volumes into lows. It's not a requirement, but it's something you see a lot of time during these market declines. So could we have a bottom without one of those? Well, again, this was a decent sell-off, but if we get kind of this rounded, or not necessarily a rounded bottom, but if we get a multi-cycle process of bouncing along kind of this bottom here, that could be enough distribution, enough selling over time where where we can just move higher. So I don't think we necessarily need to have that huge sell-off for the market to move higher. There are many cases of seeing markets sort of bottom like this, and especially because we did have this wide consolidation for so many months, and then this sell-off here. That could be it, with a couple of cycles added to it. let me get back to my questions. Okay. Correlation, where am I? Sorry. Correlation between stock market and Bitcoin, none as far as I'm concerned. I think Bitcoin is irrelevant at the moment to the stock market. It's just talking about a pimple here on an elephant's behind, as they say. Bitcoin and the market is still way too small to be impacted or have any real correlation at this point to the stock market. The only thing that comes close to anything that's correlation is the stock market is typically a risk-on type market. So when people want to put capital to work, they want to have a risk-on. Stock market's a place. I see Bitcoin, at least now, as more of a store of value. So it has more of the gold properties. So it has a lot of hedging attraction to the market. So I think if we do enter into a global recession and the stock market begins to decline and money starts to outflow from the stock market, I do believe Bitcoin will see inflows because of that as a safe haven, just like gold would. So I think there's an anti-correlation to the stock market, but not because there's any real tie to the two, but purely because they have different sort of investment themes for a lot of the participants as well. Your thoughts on, so I'm right here, your thoughts on the future of crypto and blockchain? Well, I mean, I'm very bullish on crypto. I'm very bullish on Bitcoin, perfectly honest. I'm not too bullish on anything else. I think there isn't much room for multiple cryptocurrencies. So just using the word currency there. I'm not a proponent of all of these payments-like coins, for example, Dash and Stellar and so forth. I don't really see a market for many of those. I think Bitcoin is going to be perfectly well suited once technology is solved and as technology evolves to serve as both a store of value and a payments solution. So for me, it's really about Bitcoin. Not that I'm a maximalist. I don't tout myself as being something like that, but I think Bitcoin is really all you need. And then when it comes to blockchain, I'm a little very skeptical on the need for blockchain. To me, blockchain is just one part of the mechanics of Bitcoin. I think without a purely decentralized, permissionless, public ledger blockchain, a blockchain is kind of useless in my opinion. I don't see the technical merits from a data storage or data perspective as a technology. I think it goes hand in hand with the public decentralized component. So that's my view on that. Can you talk about the price of the dollar and BTC? Some analysts suggest a leg up to 110 on the dollar index and then down to 60, which would bring one of the big shorts. Presumably a leg up would impact lower BTC. Yeah, I mean it should. So how can we put this? So Bitcoin is a commodity, or like a commodity, trades like a commodity. Dollar and commodities generally have an inverse relationship. And that's because the dollar is the reserve world currency. Every commodity market essentially settles in US dollars. So if you want to buy any commodity, you're essentially first converting to US dollars and then buying that. So it makes sense that if the price of the dollar goes up, then the commodity will go down and so forth. So that is definitely how the commodity markets work. It's how the gold market works. I'm not sure if the Bitcoin market is going to work necessarily that way. We don't need to settle in US dollars. They're not traditional commodity markets where you need the dollar necessarily to transact in Bitcoin. It is definitely a global asset that people are transacting in local currencies as well. So I see less of an impact like you would, for example, see on gold when the dollar goes up or down. Certainly, if certainly in other currencies, price in other currencies, you'll see an impact there, but with the dollar, not so much. So, and then Risk Ninja 8 says asks, I want you to play devil's advocate on your cycle theory. Well, I'm doing that. I have done that. What causes cycle transformations, and in your experience, how to take advantage of these? We're holding the 200 for now, but but a big fat what if is also needed to be considered. Well, I don't use 200, I don't use moving averages, but I'm giving you what ifs right here. This is exactly what I did today. It's exactly what I do every day in my trading. I always think to myself, what if? Again, the cycles here, people seem to think that this is not like TA where if you have a triangle breakout, then it's clear, right? Triangle breakout means X. It's going to move a certain way. Cycles don't tell me that. Cycles are just this rhythmic motions, ebb and flow depiction of price on the chart. But they're kind of vague at the same time, and we get long cycles, we get short cycles, we get cycles that top early, cycles that top late. It's my job as a cyclist to try and get a feel for the pulse of the cycle, which means a feel for what the community, what the ecosystem, what everybody who's trading this asset, what they're feeling, what the sentiment is like. This price just represents, and the cycle represents sentiment. That's why I said earlier it's a backwards facing viewpoint. If you get ahead of the cycles and start to think that you know exactly how the next cycle is going to evolve and the one after, you start to get yourself into trouble. Even in my 4-year cycle presentation, I had shown that that's one viewpoint. It's using the trend, it's using the macro analysis that I have, but it's not guaranteed to necessarily go that way. We could still see a continuation lower, and there would be no reason why we couldn't see this drop down and then kind of this come down and make a lower low in April. It still would be within a reasonable time frame for a 4-year cycle low in April. Okay, so yeah, we have to be flexible. We have to be ready to adjust quickly. The scenarios I present generally are the ones I most favor from a cycle standpoint, but they are not absolute viewpoints. And I can't keep reiterating that enough. It's not an absolute view. It's a guide that I think gives me an edge, and that's how I want to position myself. But at the same time, I'm looking for the other scenarios that tell me that, maybe it's not the case. This is what the case is. Then I can adjust quickly and pivot. So that's really something that's important for everybody to understand. And then principles when deciding how much profit percent to take when we decide to sell and reinvest. Okay, this is definitely a question about time frames again, right? So it depends on the time frame. If you're trading long term, then something like the 4-year cycle works perfectly well, right? So yeah, how much profit you take? You take a lot of profit. You take most of your profit at the top. If you've gone from $1,000 to $20,000 and you are so extended on any chart, if you look at something like this, right? If you look at something like this at a weekly, which is no, Bollinger Band's not going to work there for a second. If you look at this move on the weekly and you see it go from $800 to $20,000, you got to know when enough's enough, when you've made enough profit, and what the likelihood that a parabolic move that moves $15,000 in 5 weeks, how much more likely is that to continue? It's not. You just have to be. You have to remove yourself from the bias at that time and trade it accordingly. So it's all about time frames. Going back to your question about when to take profit or how much to take profit. Yeah, you want to take a lot of profit. You want to take most of your profit, but you also want to ride the move. You don't want to take profit too early. It's kind of an art or a science. You have to look at the market and get a feeling for where it could go, and start to scale out of profit. And then reinvest. Same thing like now. Like if you're a long-term holder or your long-term viewpoint, then you're scaling in. You should be fully positioned by now if you're long-term, and then maybe adding some more on some dips if you need to, if you think to. But again, it's all going to be a reasonable allocation to the market. And then in a shorter time frame, it varies by strategy. For example, if I bought, say, this break here, I'd probably want to take 50% of my profit up at the next level, which is probably around about a 10% move. And then I would want to move up my stops very quickly to at least the break-even point and above. Okay, and then I would want to let the rest ride and see what the cycle can give me. I want to hold, and if this can go up higher like this, I want to be positioned with at least some of my initial investment from the 60-day trading standpoint all the way up as far as it can go to a reasonable level. And what I would do is I would either look for a reversal to get out, or look for a logical extreme point that I may want to get out from, and that could be something like this area up here, which you know, there could be some resistance up there. So I may even like want to hold all the way up to 5,400. Maybe it gets up there. If it doesn't, then I wouldn't hold all the way back down. I would get out at some reasonable point. I'd probably turn on like a 10-day moving average. So here it is here, 10-day moving average. By that point, maybe up around this area here, 4,400, and then I would probably use that to get out. That's just an example of kind of what I would do. Hope that answers your question. Again, time frames are very important. And then XRP analysis. I don't really have an XRP analysis, but let me see if I can get into that a little bit. XRP. Yeah, XRP, it's just, it's trending sideways. It's kind of in a rectangle pattern right here. I think this is bearish overall. It could be a little bit of a sort of a head and shoulders forming here, or has formed, I should say. Okay, I'm just sort of drawing on the fly here. I'm not positioned in this. So this looks like it could be turning over. The news on the JP Morgan coin is probably going to weigh on this market a little bit here, but yeah, this is not bullish in my opinion. If anything, a break kind of below this sort of line here could get you in short or out of XRP as well. All right, that's the analysis. If you loved or liked this video, please like it. Please subscribe to the channel. That's the only ask I have. I'm not asking you to do anything else. No other pitch, no other codes in this video. That's all there is for today. I probably will try and get back to you in a week or two with another video. Again, hope you enjoyed it. Have a great weekend, and protect capital. Always risk only what you can afford to lose, and don't chase the market. Thanks again, and take care.